Now we're going to turn to the international market, but before we get there, we just wanted to provide an update, just like we did at the segment one. At the beginning of segment one is talking about OPEC. The OPEC meeting came and went, looking at what are some of the impacts in general. They're going to keep their production, going at 400%, at a 400,000 barrel a day increase. Again, fully in line with what our expectations were. That was our base case, was that you were going to see them maintain that 400,000 barrel a day, just along those lines that have been laid out. We just think that they're going to start getting a bit more cautious on what does Q4 look like leading into Q1 and beyond in 2022, because they're starting to see what we've been seeing, where we're getting to a point where builds are actually going to start coming back through, and their goal is to try to reduce back below what they've, like to just talk about the 5-year average, even though they blew apart the 5-year average at the end of 14, going to 15 and 16. But when you look at what they're trying to do, they're trying to, again, signal to the market support. Russia is still over their quota by 103,000 barrels a day. Libya obviously not being a part of this. They're at about 1.2 million. We'll talk about that more as we go through the different time periods. And the issue is, as just marrying with what's happening right now. So even though we're getting this increase in general, when you look at West Africa is well below the allotted amount, just because they're not seeing demand to that level. With Nigeria so far fully oversaturated with crude, going into October, where October sales have moved nothing. Anything that has moved are just reoffers. So you're in a big problem point right now with the majority of Nigeria's October cargoes yet to find final buyers, with many shipments sold to date being reoffered. And right now the tally isn't exact, but there's about 42 cargoes scheduled. So you're looking at 42 cargoes that, typically we're now into September 1st. Half of these should be sold at this point, or at least 25-30%. And right now we have zero. Now, Angola's crude for October loading is selling at a faster pace than the previous month. 78 cargoes remain to be sold, including reoffers. So now that's faster than last month, but still slow when you look at the 6, 10, 12 month average, but still just better for where things are. But let's break down the reason why. Angola typically goes into Asia, more importantly, China. So we've seen some of China pick up some of that buying. We already know that they've been purchasing some of that Angolan cargo. So it's not surprising to see some of this West African crude going in there. It's just not coming from Nigeria, leaving a significant amount of product sitting there, which is why when we look at what is coming, what is available, even, and this is, again, coming to the demand cycle and where we see some of these demand pressures. This is what they're seeing, the JMMC. This is what we're seeing in general in terms of what is offshore versus onshore and what is to come when you look at forward physical sales. And that's where there's some of this overhang, if you will, as we not only head into October, but really November. And now given, OPEC is supposed to meet again October 4th, they could meet sooner. It's just what happens next. And if you look at political capital, right? So they struggled to come together in July. They finally did come together, in June, which led into July. That led to some of this overhang as we got into, obviously, July 4th and beyond. And then they came to some sort of agreement, let's call it the third week of that month. So now when we go forward, the issue is going to be if they start to see some of these issues, actually materialize. Could they cut? And not to say that they would go from, when I say cut, I mean instead of increasing production by 400,000 barrels, they increase it by 200. Or maybe they pause. That is the potential, because I think there's enough political capital to get a less of an increase, or maybe even, depending on how bad things are, potentially a no increase. What they would struggle to get together, especially on the political capital side, is a reversal and actually a cut. So instead of increasing by 400,000 barrels a day, cutting 100,000 barrels. That is, I think, a very hard ask, which is why when we look at some of the things coming into November and December, we think it's more likely that we get a pause in the 400,000 barrel a day increase and something closer to 250, 300,000. But again, these are going to be some of the things that we're going to watch for and look for signals based on what are the commentaries coming out from OPEC, but also what is the market telling us and what are we seeing on the storage side. So now when we look at exports, remember, as we said last week, the gasoline exports seemed much higher than they should have been. Here you had a drop of 445,000 barrels a day. That's now 81,000 below the 5-year average. Distillate, as we were saying, was going to just go sideways. It was a small drop of 47,000 barrels a day, 78,000 below the 5-year average. Propane or LPG maintained was small, just a 10,000 barrel a day dip. So that's 381,000 above the 5-year average, which again is going to be that bright spot when we look at what's to come. And then when we look at U.S. exports, you had an increase of 228,000 barrels a day, bringing us to 3.04 million per day. Now, when you look at the heading into the end of the month, that's where we typically see this push for product. And then, so it's typically, you normally get these pushes in either the last week or the first week of the month. And it can change, or it can be both last week and first week based on when are the filings, when does it move through. So we will see a bit of a bounce in gasoline. But when we look at where some of these exports are, because we have so much damage into the Louisiana side, it's going to be a problem based on where do the imports come from, where do the exports come from, and where are they originating. So you're going to start to get some of these heavier timing delays just based on the redirection away from Louisiana for now and into other ports, more specifically Houston and some of the other Louisiana areas. So again, that's going to start to fluctuate where some of these are going to go and make these even lumpier than normal. So again, but we'll keep an eye on that going forward. So then when we continue into WTI Dubai, you can see that we're hanging in at the current spread level. Still, now that we've seen the 400,000 barrels a day confirmed, we expect this to maintain, something maintained closer to that, let's call it $3.50 to $3.25 discount, which is enough to provide some support, but not the full amount that we would have seen if we were back towards that $2 discount of Dubai versus WTI. Because right now there's really no need, or there's no driver to import U.S. versus Dubai. Dubai has a bit more value at this point, when you're looking at the shipping distance. And now when you look at West Africa and the amount of discounts that Nigeria is going to have to start issuing in order to start getting some of this October cargoes moved, that's going to provide an even bigger overhang into where some of this WTI crude can go, especially when we're thinking about going into Asia. So something similar playing out in Brent. We're not seeing all that much movement in terms of just where the discounts reside. We did get a fairly bullish draw out of European stocks. We expect some of this, because it doesn't make sense to go into Asia or go into some of the other markets. We'll see some of this additional capacity get purchased closer to home. So now when we look at the gasoline exports, as we were saying, we got this big spike up and now this overcorrection to the downside. Realistically, we should be, as we were saying, we expected to be back within the cloud, above the 5-year average, but still within the cloud itself. We didn't expect this spike, so now we got that reverse down. And we just expect to be just above that 5-year average, but moving closer to where we normally are at this point of time of the year. Distillate, just the amount of clean product coming over, it's gonna stay ugly. It's gonna stay, I should say, heavy in terms of exports, and that's gonna keep us just moving sideways because of this realistically Harvey impact right here. That's gonna keep us, the comps will get easier, but we don't expect much to change in general as we go through the remainder of the next few weeks. Exports sitting here now just above 3 million barrels a day. We expect this to come closer over the next week or so to about 2.8. Because remember, as we've been saying, we expect to be on a 4-week rolling average between 2.6 and 2.8 million. Right now, we're at about 2.987. We expect that correction to the downside, keeping us really at that 2.8 level over the next few weeks. Then when we look at propane, LPG, again, still strong, still going sideways, seasonally adjusted high. We just, again, don't see that changing, going to remain that bright spot. Here's that drop that we saw so we were expecting a little bit of a build. Again, not a big build, just kind of that pivot higher and then the trend starting to move into a little bit more of a steady increase. Instead, we had a slower pace of draws, but still a draw. And that's something that is going to take time between what is onshore and what is offshore. And we expect to see some of this balance out and see some of this increase back up. Again, not to the 5-year average, but at least a little bit of a bump back up, really taking back, let's call it, a quarter of the move that we've seen so far. Now, when we start talking about some of the differences and some of the things that have happened, we want to look at India. So the sale of gasoline in India continued its gains in August, following a blip in the first half consumption as the rollback of restrictions, essentially ended. So right now it's up 4.1% versus the same period in 2019. Again, all of that is very positive. The problem is the diesel side. So sale of diesel, which is the most widely used oil product in India, were 9.3% lower month on month. That's 9.8% versus the same period in 2019. So it's not only below month over month, but it's also down against 2019 by almost 10%. Sale of jet fuel picked back up 20% month over month, but that's still 45% below 2019 levels. LPG sales dipped 1.7% month over month, but that's still 1.9% above year over year. Again, speaking to those LPG moves. And then right now, at this point, and this is what we keep talking about, diesel was impacted by the monsoons more so than normal. Obviously, they continue to have an economic problem. So even though gasoline is okay and the consumer's moving about, the consumer's also not really buying anything. They're just moving around. And then on the underlying economic side, that diesel side, we continue to see a significant amount of pressure points residing in the system. So then when we look at what has happened so far in these moves, you can see we now have the full allocation for September. Russia had that little increase to about 3.3 million barrels a day. Libya is still pumping at exporting about 1.2 million. Now remember, the fight that they're having right now could put 250 to 350,000 barrels a day at risk. That's going to be something to watch in general. The biggest issue that we're seeing so far is in Nigeria. So right now they only have about 1.2 million slated for October. That will go up to about 1.5, and all of that is still available. So if you want to buy some crude, there's your option. Where Angola had a small increase as we had some deferrals from September and October. Now at about 1.178, there's still about 10 cargoes available. So this is where we continue to see some of these overhangs in the system. And when you look at Iraqi crude exports from SOMO, increased 5% to 3.05 million barrels a day in August, which again is still elevated. Shipments of the 3 Basra grades went up by 5% to 2.96 million barrels a day last month, while loadings of those SOMO blend were up with July at 97,000 barrels a day. So again, you're starting to see Iraq move a little bit more. They're getting a bit more competitive in the market. Then on the other side, Shell sold 85,000 tons of CPC at $1.75 against dated Brent, which is well below the $1.35 in the beginning of August. So the end of September getting much weaker so far versus the beginning of August. And that's that slowdown that we're seeing. Now on the Ural side, you can see there was 100,000 tons of Urals for September 17, 21st. Sold at $1.95 versus dated Brent. That's a little bit better than the last one, which was $2.05. So we're still seeing that $2 bid, or $2 below dated Brent. But if we look back the last few months, we see this movement up to $2 below dated Brent. As we get closer to the end of the month, we typically see that go back to about $2.35, $2.45 below. And that's going to be something to watch, because again, those are those overhangs that we continue to see, because we're just not seeing this clearing and this overhang. And now with West Africa having so many unsold cargoes, that's going to put even more pressure on how do Urals compete into Asia, ESPO, as these essentially Nigeria is going to be sitting on a lot of cargoes. So now when we look at products in general, so when we look at Fujairah, reported 17.682 million barrels, which is a fall of 596,000 barrels in total. This is the first time they've fallen below 18 million barrels since March of this year. The draw is a continuation of last week, but again, it's going to come down to, as do we typically draw this period of time, and then we're going to start to see some of these builds come back. So when we look at some of the flows in general, stocks of light distillate, including gasoline and naphtha, rose 131,000 barrels, or 2.3% on the week. So again, light distillates continue to see some of this build higher, and the build came as around 2.2 million barrels again came offline. This is going to throw off some of these flows in general, as we still see weakness east of Suez, but some strength in west of Suez. Stocks of middle distillate, including diesel and jet, fell 285,000 barrels to 3.675 million. This is a continuation of last week's. And again, the ARB is still favorable when we're looking at the Asian gas oil barrels flowing to the west. So we're going to continue to see that ARB staying open and remaining strong, taking cargoes from the east of Suez into the west of Suez. And we'll see, again, that moving forward, keeping not only just the U.S., but the Atlantic basin fairly supplied. And then stocks of heavy resid fell 442,000 barrels to 8.245 million. And it's just because we've seen a fairly steady demand for shipping fuels. Now, when we look at crude oil in the water, we're just above the 5-year average. And as we continue to see right now, oil in transit had a little bit of an increase. We'll see that increase as well in transit. So we expect to just be above, again, that 5-year average. And it's, again, that transit side that's going to pick itself back up. And now the comp's going to get a little bit harder, but you're going to see us get closer to and move back above that 5-year. As, again, we look at the floating storage, which, as we've been saying, is just going to be supported sideways, because even though you'll still see offshore go onshore, there's still cargoes coming up behind it, which is going to keep us fairly firm. And when you look on a seasonal level, we normally have, and it's really every year, 2020, 2016, 2017, 2018, you normally have a drawdown, and we're just not going to get these drawdowns in the offshore market. Now, when we look at what's happened in Europe, we had a small build of 11 million tons of product in gasoline, a small draw of 42 in gas oil, and those are the ones that we're looking at the most right now. And when you look at gas oil, again, there's still more behind it, but we will see those levels of imports increase, putting more into the system. But when you look at crack spreads within Europe, they are supportive of seeing a little bit higher runs, a little bit more activity. So we will see some more crude going into this area. We will see some runs supported just based on where cracks are, as well as where storage is sitting. Here we had a small little build in gasoline. Typically, seasonally speaking, we always have draws, but you can see the pace of draws was extensive. A lot of this ended up in the U.S. And as things roll back a bit, you're going to start to see this, not so much increase, but just go sideways, making some of these comps easier. Now, as the spreads look better, we'll see refiners targeting a bit more gasoline. So we will start to see this creep higher, not really enough to get excited about, just enough to see this reverse a bit and move closer towards the 5-year average, as fuel oil still remains very elevated and still moving in the recracking side, potential trading. Again, this is something that is still elevated and we'll see move through the system. So now when we start looking at Singapore, in general, you can see that we had a fairly sizable draw from 46.1 million to 45.3. It was really driven mostly by residual, as we had a build in middle and a small draw in light distillate. And as we've been saying, residual will continue to get normalized as we expect some more builds or to offset in the middle and light distillate side. So we are down to the lows of 2021, which is a positive. Seasonally speaking, we start to get to these lows and then we start to reverse higher. The arb being open between east and west is going to keep this depressed because it makes sense to sell it into the European and U.S. markets. So here's, as we were saying last week, for middle distillate, there's enough mixture of new storage, being, and then others being sold, keeping us just going sideways, again, just bumping along. But the comps get easier, making it look better against seasonal norms. And then when we look at light distillate, as we were saying, with the pressure on light distillate demand on the east Suez, as well as even some of the pressure on the west of Suez, not so much in the U.S., but some of the slowdowns that we're seeing in Europe and in the Latin America, that's going to keep things just going sideways. Now, when we look at Brent time spreads, now that we've come to the other side and we're into November, December, you can see that there's been some pressure coming into the front end of that curve. We don't see it coming too much further down, just given the data out of the U.S. is supportive, the data out of Europe is supportive. The OPEC is keeping things fairly stable. So I think you see a lot of stability hanging in around these spreads. As December has gotten, again, continues to come under pressure when you look at December, as the JMMC starts talking a little bit more cautiously of, well, what does 21 December look like? What does 22 December look like? Where do we start to see some of these spreads, I think, come into these pressure points? So then when we look at some of the spreads on the Singapore side, here you can see that we're starting to get a little bit more strength in these spreads. They're still negative in Singapore, but getting better. And this is, I think, something that's going to be something important to watch. When you put it into seasonal terms, though, especially on the hydrocracking side, on a seasonal basis, it normally gets stronger this point in time. Now, we are back to the highs of 2021 on just the refining margin side. It should get, this is typically a stronger period. And now the spreads in Europe, or I should say in East Suez, is supportive of taking some of this excess that's been weighing on this and absorbing it into the Atlantic Basin, helping to drive up some of this support. And then when you look at spreads on the oil side coming under a little bit of pressure, that's helping. Again, any of that on the front end is then gets passed down directly to the refiner. Now, when we look at what's happened in Europe, especially Northwest Europe, you can see Ural's margin has gotten better, now even more positive, which again is going to introduce a bit more runs, a bit more Urals. Libya is going to keep moving through. And then when we look at the Mediterranean, again, it's now, even though we have 2 points that are negative, on a net basis, it's now positive. So again, there's going to be more activity, which will pull more oil into the system, but also put more product in as well, as the China supertankers continue to move along seasonal norms. Now, when we look at teapot run rates, you can see that they've picked back up to 68.4 or 68.5%. Seasonally speaking, typically, obviously that we're above seasonal norms, but seasonally speaking, this is when activity starts to increase. So we don't see it going much higher than 70%, and it's really going more sideways. So it looks good seasonally. I think it just runs right into what the runs were in 2018. Now, when we look at floating storage in Asia, you can see how elevated we are even versus historics. Typically we get drawdowns at this point in time, but when you look at the onshore storage is still elevated in Asia, and offshore storage, which again is just pointing to that oversupply that we continue to see in the Asian markets, keeping weight on new purchases of physical. That's why you're seeing a lot of reoffers. This will push more crude into the west of Suez, and we'll start to see that way as those shipments start to show up and keep pressure on U.S. exports, as there just isn't that demand for U.S. product. North Sea saw a nice drop. That's something that, as we were saying, more of like a chevron pattern, just going sideways, and then it'll run right into this normal drop again. So seasonally speaking, the comps get a bit better. West Africa storage going higher based on what we're seeing in Nigeria. It's going to keep going higher, and again, keeping pressure on where things sit today. On the Middle Eastern side, we're back above where we were in 2020. The only time you can see 2017 is very noisy, but the trend continues to go up. And now that we have another 400,000 barrels officially coming to market per day, Dubai is going to stay cheaper than Brent, and is going to put pressure on Brent and WTI, and you're going to see these continue to creep higher. And I think this is the one to watch when you see how oversupplied is the market really, because these should be clearing. So when you look at West Africa releases their loading schedules first, so you get a sense of where things are. But what Middle Eastern crudes have a lot of variety, have some of that demand, and they sell on term. So not to say that Nigeria and Angola don't, but Middle Eastern crudes, more of it, or I should say even more than West Africa, sells on term. So as you see this going up, that's pointing to people rejecting or just not taking some of these term, because you can reject or you can just defer. And again, these are going to be some of the things that put more on the spot market, more pressure in general, which then bleeds down into why the Dubai is trading how it is versus Brent and WTI, which is going to be a key one as well. Europe, again, as we were talking about with Genscape, it's that delay. We saw an increase in floating storage, drop on onshore. This is where we're going to continue to see this battle back and forth, which is why we don't see this huge increase in onshore storage, but we also don't see a huge drop, because this is going to just turn onshore. Now, when we look at China Shandong crude stocks, steady move down as we saw run rates increase, which again is going to keep some of this moving down a bit, which is net positive, until they can bring some of that offshore crude onshore, keeping us pegged to the highs. Now, on the problem side, even though we saw a drop in crude oil, we saw an increase in fuel oil stocks and stocks in general. So we continue to see a build of products. China continues to be weak on an economic level, on a demand level. It'll be better in September than August, at least so far, based on how August closed and September starting off. But September is a long month, and it'll see, because again, we think that there's going to be more pressure in the macro market in general. So I know we covered a lot. We had Henry, we had OPEC, we had a lot of events happening in general. So if you have any questions, please let us know, either email, Twitter, in the comments section. So thanks again for watching. I'm Mark Rossano, founder and CEO of C6 Capital Holdings, coming to you from Primary Vision Network.